Hey guys, Boris Lasberg from BK Forex. Welcome to our weekly Forex technicals for 9/9/9/14 of 13. Back to range. As always, trading foreign exchange on margin carries a high level of risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, let's take a look at a euro, which certainly turned around today off of lackluster NFPs. And 31 now becomes support. We kind of just sort of hanging out here on the highs of the day at 31.76 before we close out into the Asian session. But I think the critical question is, is this a bottom over here? Do we kind of hold the lows? The only reason why I am skeptical of whether this is essentially a bottom is because Draghi really beat the crap out of euro on Thursday by basically saying that rates are going to stay very, very low. And if the market is convinced that the Fed is going to move towards taper, irrespective of the lackluster NFPs and the possible prospect of Syria hanging in the background, it may be a situation where you could get further weakness in the euro. But I think at this point, it now becomes a matter of 130 as a kind of a basis for the euro in terms of further downside action. So we could have a stall here and possibly move to the downside, but I think 30 will cap the move for the time being, unless we get a sort of an uber bullish view with Syria going off the radar. Let's say, I don't know, the Congress doesn't approve the Syria strike. That becomes a non-geopolitical event. And then we sort of focus much more on the domestic issues in the U.S. That having been said, though, there's still a tremendous amount of unpredictable risk on the domestic side of the U.S., especially with the renegotiation of the debt ceiling, potentially a contracting fiscal policy out of the U.S. So it's difficult to say whether it's an unequivocally dollar bullish kind of a move here in many ways. And that's why I think you see sort of this very stutter step market. Generally, I mean, honestly, what's fascinating is that since July, if you think about this, we've had swing, counter swing, and if you think about it since May, it's been swing, counter swing, swing, counter swing, and that's been the story of the euro. Every fake out has been a breakout. Every kind of a range bound move has been a stall. So now it looks like we may be sort of settling into a micro range of 130 to like kind of 133 to the top side. Until we get a little bit more clarity in the marketplace. Anyways, for the time being, 31 certainly is the key hold. That's going to be probed probably next week. And the key thing is if that holds, then we have a potential here for a more meaningful base and a potential re-rally back up to 33.50. That's the micro range that we're now operating in as 31, 33.50, and maybe with extension around 30.50 to 33.50. That's kind of a move here until we get more clarity. So little to really get excited about on the euro side. The yen really puked back at the 100. We took the 100 and came right off it. Now, what I think would be very bullish, and this is going to be a big question whether that's actually going to happen, is if we come back, retake the 100, close above 100, because that would really signal that the market is ignoring a lot of the negative dollar news, negative risk aversion news, and is really wants to take the pair back up towards its yearly highs. If, however, we cannot close above 100 and re-rally, then I think you see just another failed attempt here. Last failed attempt was at around 150. This one is at 112. And then we're looking back to a slow drift to the downside. Initial support 97, then, of course, deeper support 96, and ultimate support 94. But to me, that's going to be a very, very interesting tell next week as to how we trade in the near term. It would be really, really bullish if we could just re-rally and hold above 100, but whether that's going to happen remains to be seen. Cable, it's just a pale imitation of the euro at this point. It is doing a little bit better than the euro on a relative basis, but still, it's kind of just flaming out around the 56.50s, and that's mainly sort of a less a function of any kind of UK news and more a function of the fact that dollar's still basically there's just a lot of overhead resistance around the 57.50 level, and that's going to be the key level here. So if you sort of look for the pound to break out, it really needs to close above 57.50 and telegraph to the market that it's ready for a new leg up. Otherwise, it could just be another slow drift lower, cut of 1,000, death of 1,000 cuts here as we kind of drift all the way down to 55. The key support here is 54 to the bottom. and we could be just sort of forming like a lower bottom here on the move here. Aussie, actually, surprisingly enough, has held the best. And I think that's really been a function of the fact that the RBA said, yeah, we're not going to really lower rates anytime soon. Even though the data has been, mixed, the retails have been weak, GDP was okay. We do have the Australian election over the weekend. Looks like it's going to be a new government, but it doesn't seem to be having much of an impact on the currency. So if one of the interesting things would be to see if it does have any sort of a meaningful impact on the start of Australian trade as we go forward. But it does seem that the new government is a little bit more expansionary, and therefore could be seen as more buoyant for the Australian economy. So that could be offering a little bit of support to the Aussie. In any way, Aussie right now really is a very, very strong base with the breakout level around 93.25. So you take out 93.25s, then you have all of this freedom all the way out to 95s that could work for you on the assumption that obviously you have a complete recalibration of sentiment towards the Aussie. So we'll have to see how that's trading out. One interesting look today that we haven't looked at in a long time is dollar CAD. Dollar CAD had very, very good numbers on the employment front. Oil is certainly simmering higher. Basically, I think it's one of the more interesting things that if you do get a Syria move and oil starts to move, let's say towards 120 on the West Intermediate, you have a much stronger case here for a move towards the back 102s and certainly possibly even the 101s. We've definitely kind of tapped out here at 106. 106 continues to be pretty much the double top formation. But the next level of support is 103, and then the next level of support after that is 102.50. And the way Canadian dollar has been trading, it generally sort of has you have the small burst and then just a very mediocre follow through. So I'd be looking for 103.50, maybe 103 at most, before it again finds a little bit of a support here, unless we get massive move in the oil markets that could be supportive to dollar CAD as we go forward. On the crosses, what looks interesting, where's my euro pound? Where's my euro pound? Why am I I'm not looking at it. Here's my euro pound. Okay. So yeah, we talked about earlier how 84 was a really key support for the euro pound, and it would certainly seem to bounce back. So there's two ways to kind of look at this. You could say, all right, I'm going to basically trade at range, and this is a very low risk trade. So we know that our risk is basically right below 84. I'm going to take a spec and just basically assume that's a bottom. Or you could be in a situation where effectively, let me just go zoom out. Where a break here, and I would actually say the break of these lows over here could really precipitate a move all the way out to the 83s, maybe even 82.50s. That's going to be a function again of just how weak they want to drive the euro. So I think it's really going to be if the euro starts to tumble through this 31 level towards the 30 level, then you could really see euro pound coming in. The only negative aspect to that idea is that we just had the first bad piece of data out of UK, which was the trade balance kind of expanded unexpectedly, and IP did not come in as strongly as expected. But overall, UK data has just been in a mini boom, and you have to respect that fact and believe that it's pound strength against what could be further euro weakness that could be the trade. Or you could just spec the bottom here and hope that that you've caught the bottom for the near term for a possible bounce here towards the 85 max, I would say, before I think it runs into any kind of serious resistance on this front. So that's kind of how the week shapes up. There really is not that much on the calendar. There are a few meaningful data points at the end of the week with the U.S. retail sales to watch for. And I think the biggest stories to watch for is the key levels in terms of the euro with 131. Is it going to break that again? In other words, we turn it back around. And with dollar yen, the much more interesting story is, will it retake 100? And if it retakes 100 and hold it, then you got to be a bigger believer than you are now. So I think those are the key things to look for as the week progresses. Wish you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. Over and out.